All right, Ryan, welcome to the BlockHash podcast live episode 203. How you doing today?
Doing great, Brandon. Thank you very much for having me.
Yeah, happy to have you on and talk about Radkl and everything you're doing. Before we do so, I want to learn a little bit more about yourself and your background, what you've kind of done in the industry before. Give us like a bit of a rundown of what you've done and what some of your experience is like.
Sure. Thanks for having me on again. So background, let's hear. It's been about 26 years I've been in various different financial markets, and pretty much the whole time been focused on, how we can innovate and disrupt the way things are done. So I started my career way back in the mid 90s at Lehman Brothers, Wall Street Bank, and when everything was done manually and online, and immediately started working with some of the other quantum developers to figure out how we could sort of automate all of our processes and make everything more sophisticated and more technologically enabled, and kind of continue that out through my whole career. Focused on a variety of different markets where, again, we could put the application of technology and quantitative techniques to improve the way everything traded. And then, about 3 or 4 years ago, ran into this thing called blockchain and crypto, and started diving deep into that, and found out that there was a massive intersection between the two of them, and looking now to take Radkl to do the same thing in that universe and disrupt things going forward.
What was that intersection that you saw that you felt you combine quant and crypto?
It's interesting. So my first introduction to the whole world of kind of crypto actually came from a different end. It came from the more looking at uncensorable and undisruptible media and other aspects from that perspective. So it was kind of the core underlying technology. And that really, led to the whole distributed nature of and distributed computing, and how we would see sort of a proliferation of those kind of distributed technologies carry out. And then the after effect was how that then bled over into the actual, trading. And what we see is that there's a lot of parallels to other markets that we've had in the past, where you have very complicated market structures. You've got a lot of different coins, you've got a lot of different exchanges, you have a lot of different things going on in different areas of the world, geographies, etc. And there's a real need for an ability to kind of stitch all that together and create consistency across all of it. And, my whole career, our firm's career, what we focused on are arbitrages and other techniques where we can link markets together so that people that are active on one market can feel they're getting a fair price because someone like us is keeping all those different exchanges and tokens and different products in line.
Got it. What was there anything in particular that made you want to make that jump, like something in crypto that made you say, "Oh, this is far better for maybe doing some kind of quant trading than typical stock market"?
Yeah. I'll tell you what it was to me was, so I went to the Bitcoin conference last year, the 2021, which I think was like June-ish down in Miami. And we knew we were already going to get into it, but I think it was already going down the path. But I'd say certainly what lit the fire was going on there. My preconceived notion was I thought it was going to be kind of 40% tech people, kind of 40% traditional finance people, maybe sprinkling some crypto anarchists in the middle. And when I went, I realized, nah, this is a whole other world. This is a whole other group of people. That was the first thing. I was blown away by the diversity of people. And then the second was, how this is where all the young and innovative people are. When I look at it, there's been, probably, if I think about it, probably in the 90s, a lot of those people went to Wall Street, early 2000s and teens, they went out to Silicon Valley. And now what really hit me is that the smartest, aggressive, most innovative young people that ultimately are the ones that ended up changing the world and doing cool things, they're all in crypto right now. And to me, that's it. I don't know what the answer is. I don't know where the best trade is going to be. I don't know what the right thing is to do. But I know that if you go where innovation is and you go where disruption is, there's going to be a huge amount of opportunity. So that's, I'd say, what really hit me. And it's only continued. More and more, the more you get involved, the more you look at it, the more you see, the more you realize, this is where all the kind of the smartest people are right now.
Yeah, I think everything's kind of gravitated towards crypto just because of the excitement and because of the opportunities. And it's a very crazy market. I know because I also try and trade in it, and I've had lots of conversations with people that try and do quant stuff. It's difficult because it's 24/7 in multiple jurisdictions all at the same time. And there's lots of different factors that can move it, but there's also a lot of opportunities. So it is exciting. I imagine you guys are wanting to jump into it for the same reasons. So what is Radkl exactly?
Sure. So Radkl, so to know Radkls, to know a bit of the lineage of where some of the, where the founding partners came from, which was GTS. So, um, we have a long tradition, 14 plus years trading, high frequency trading in a variety of different markets, equities, ETFs, futures, fixed income, and really as a kind of liquidity provider and active trader and arbitrager in those various different markets. And we're bringing that over to Radkl. So Radkl is really the same thing. It's it's active trader, making, looking to do what we do really well, which is the application of quantitative techniques through scalable technology to provide and take large amounts of liquidity in a variety of different markets.
Is this a private, like closed project just for you guys, or are you guys letting other people invest in it or use it, or what's the end goal?
Sure. So, I mean, end goal is a great question.
Hmm.
We'll figure that out.
Or
I'm
just
sure if
trying to
we,
build it?
I was gonna say, if we replay this podcast in a year, I think whatever I say now, we'll realize like, oh man, it's been totally different from there. But
Sure.
whilst we're building it, no, it's not a hedge fund. It's a principal trading firm. So it's the founded by the partners of GTS as well as one outside partner, which was public. But outside of that, no, we're not in the business of fundraising, or it's not a
Hmm.
project, so to speak. It's really our business that we are looking to deploy what we do well, which is our technology and our quant into the markets.
Okay. Have you used this previously in other funds or other methods within the stock market before, or is this something completely new that you're putting together?
No, like I said, all this is born out of the lineage of GTS, which
Okay.
has been, around a little over 250 people, been in the markets for over a dozen years, very active on stocks, ETFs, futures, FX, very big in single name options. So no, the lineage and the core of the people that are forming Radkl come from a very long history of having done this in a variety of different markets, both from a business perspective, like myself in trading, as well as from a quantitative perspective, and then finally from a technology perspective. So it's really, it's born out of the, that core of having done this for a long, long time, which I think is really critical because while
Hmm.
crypto has certainly a lot of nuances. I mean, you mentioned 24/7, multiple jurisdictions, but also has a lot of similarities to what we, other markets and things we've done in the past, which gives us great, excitement to realize that the things we've done in other markets that have made those markets better, more efficient, uh, there's going to be a place for doing that over in crypto as well.
Yeah, I know a lot of people that are always trying to, capture alpha in some kind of way. And they look to quant stuff, but they also look to crypto because it's, so crazy. You can have massive swings in single days out of nowhere. And even in a bad market, something's moving somewhere. Do you guys have like a strategy, or what do you look for when trying to do this with crypto? Do you look to measure volume, or you look at long-term charts? Are you doing it on the daily? What's the strategy kind of look like?
Sure. We really, I mean, you bring up a good point. The reason crypto is very interesting is as a new market that's sort of growing and figuring out how it's going to work, and so much
Hmm.
innovation with all that innovation and disruption, obviously comes discontinuity, disjointed actions and the like, which is really where someone like us can come in and provide value. Because if we can come in and say, when various different markets, get out of line, and people like ourselves can then, help bring those markets back into line. Obviously, it's good for us, but it's good for the market overall because we're creating kind of that, again, a more even market, a market where participants can feel that they're getting a fair shake when they act in it. Our frames, we really focus on, native to a firm like ours. We'll be focusing on the higher turnover, shorter end of the spectrum. We're not here to predict where, a cryptocurrency is going to be 3, 6, 9, 12 months from now. We're really focused on the here and now. We take a lot of our, we build our, but that said, we always build our quantitative models on the shoulders of a fundamental understanding of the market, because you have to respect and understand the market to know
Hmm.
how to build the quantitative techniques on top. I think if you just look at it like, a series of numbers and say, I don't really need to understand what these are, I'm just going to put it through my magical quant machine, inevitably you're going to miss something that's very specific. And I think knowing those things and incorporating in what from a fundamental perspective into a quantitative model is a very, very important aspect of things.
Are you able to factor in like the psychological effect on traders? It seems to be like much higher in crypto than in the stock market, with people massively piggybacking on certain things or piling out at the same time. Is that measurable in any kind of way?
Sure. I mean, and again, crypto, maybe trading 24/7 was where,
Sure.
maybe that was a tough call on people. You don't even get a break on the weekends,
Oh
as we
no.
saw last weekend. So measurable. Yeah. I mean, the fun thing about markets is that all that, human emotion that drives people to do something ends up in the price, right? They're
Mhm.
driven, and they leave. It's kind of the way you think about it, sort of footprints in the sand, that you don't know exactly why people were doing what they're doing. You'll never ever know that, but you can see through the action in the markets, and the prices. That's where it leaves its footprints. And by having a lot of information, a lot of history, and the smart approaches to understanding that, you can sort of distill out of that kind of core information that the markers people leave behind, the result of their decisions, like you said, and shows up there. So as you maybe mentioned, if you have a lot of people all coming to the same conclusion for the same time, it could be for any reason, and that leads to a cavalcade of price action. You can see that form and understand it, and that's what we have, right? What we have available to us based on how we do our business. We have the data, we have the information, we have what's available to everybody. But it's how we use that to then make our decisions off of that, to understand, what does this mean for where the markets are going? What does this mean for where we can take what we're good at, which is deploying liquidity and making markets, and where can we point that?
Do you feel like you can build an algo though that can, trade based on human psychology and what they're, feeling at the moment, or even maybe news based on, because those things seem to really affect this kind of market.
Yeah, it certainly does. But to be fair, they affect all markets. I mean, at the end of the day,
Sure.
even I mean, I understand what you're saying. I mean, crypto certainly has its fair share of volatility.
It
It's
affects
it's
it
every
violently though.
Yeah, it's everything else to the third power. So yes, the question is really, not necessarily, can we understand what a person is thinking, but it's more, can you understand repeatable patterns of behavior, so that, and again, what are the things that happen over and over,
Hmm.
that we can look to understand what is happening behind the scenes. But we also understand, look, our we're never going to know what everyone's doing. It's a wide and diverse market with a lot of different people with a lot of different reasons why they act. And our job is to just, do what we do well, which is keep the markets in line, keep, provide liquidity where we can, look for opportunities, and just, I think from our perspective, what we can do is, if we can help the market get to a state where it's a good place for participants, feel like they're getting a fair deal, and where they're able to transact and do whatever they want to do. So to your point, if someone feels like they really want to buy or sell a lot right now, they should feel that wherever they go to execute that trade, they're getting a good price, because you have individuals like us and firms like ours making sure that across all the different instruments, across all the different exchanges, they're kept properly in line, so that people can have confidence when they go transact.
Got it. Are you guys mostly focused on trading Bitcoin and Bitcoin's market, or a bunch of other scattered cryptocurrencies, or meme coins, or like what's the focus? Because those move
Um,
too. I mean, they have their own market cycles.
Absolutely, everything moves. And, we have different. So inside of our business, we have a variety of different business lines and activities. Some of the more
Hmm.
quantitative ones that will focus on, obviously, the larger high volume type coins. And then we have other. We do have specialists in our firms who are experts in focusing on the less liquid, the ones that, to your point, maybe move with a little bit more erratic behavior, because again, there are parallels to other markets in that. Even in the equity market, not every stock is like Netflix or Amazon and trade with that frequency and that liquidity. There's additionally a long tail of securities there, not to speak of ADRs, preferreds, all sorts of other securities. So the, that's the long answer to your quick question, which is no. Our focus is really across the board, and the focus is, say, we have expertise in understanding, quantitative modeling, application of technology to various different markets, wherever that can be applied and add value. That's where we go.
Okay, got it. Yeah, it feels like it's a good idea sometimes maybe to tier those, because sometimes the
Yeah.
big market cap ones they move a little bit slower, maybe a little bit more predictable, and then you have the crazy ones, a little bit lower market cap, crazy volumes, but higher spreads and potential of turning a profit faster.
Yeah.
So
You have to know, and that's what I was saying. You really have to know a priority when you go in, what kind of market are you going into, and then you can look and say, well, what kind of tools do I need to have, and what kind of people do I need to have to sort of to know what are the right ways to trade these markets? Because as you point out, different markets are going to have different risks, and the most important thing is to make sure you're understanding and managing your risks. And sometimes it could be some hidden risk you never really considered that's the most important one. So that lineage and expertise of understanding what is the nature of the market that you're trading can be extremely critical. To your point, trading Bitcoin might not provide you with the best background to trade some other alternative coin that's far less liquid and trades with more erratic volume. Whereas maybe coming from a completely different market outside of crypto, but one that was equally erratic, illiquid, I'm making it up here, understanding that you can have large jump behavior, that might provide you with a better appreciation of the risks of those types of securities. So it's really that combination. It's a combination of that, both understanding the crypto nature of it, but as well as understanding, at the end of the day, markets are markets, and they have sort of risk and reward is risk and reward. Like you said, people go through cycles of fear and greed. They expose those emotions into the market by trading, and they do that across all different markets.
here's an interesting question. Is there any kind of legal hurdles or regulations to go through when doing quant trading or anything in terms of limits that you're able to do, or is it how does that different in the eyes of the law in any kind of way?
Sure. I mean, there's obviously much debate and conversation going on now about regulation across crypto. And the good
Hmm.
thing for us is it's something we're very experienced in,
Hmm.
both from a personal perspective. So I was very active in the fixed income markets back in '08 and after '08 when Dodd-Frank came out, and we saw a whole revolution where you took markets that, much like crypto, were relatively unregulated. Certainly in the eyes of the core regulators, they considered those markets to be outside their domain or sphere of concern. And we saw within the course of probably 3 or 4 years go from that state to an enormous amount of regulation, mandatory trading, mandatory clearings, and very, very specific and prescriptive regulation. So I've seen markets and lived through markets that have gone through that transition. You just have to understand it. And so I think the key is always not just understanding what's regulated right now, but sort of looking forward to say, where's the regulation going? People like us, we're here for the long term to add value into the market. So it's important we do it with a very critical eye towards making sure we're not just doing the right thing today, but doing the right thing based upon where we think the regulatory environment might be going in the future.
On quant trading specifically, is there any regulations around that because it differs from the human aspect of trading? Is there anything that kind of
Usually speaking, quantitative models can do things at, say, higher frequencies than people can. So you really need to
Mhm.
just control, what your models are doing to make sure that you're employing best practices, i.e., not entering and removing trades in a way that look like you're trying to manipulate the market because a machine can move faster than a person. So you really just want to, keep a very close eye. There's been a lot of work done in the equity markets by the different regulators and industry bodies to sort of define what is good nature of what a particular algorithm should do when it's interacting in the market. It should be bona fide trading, should be, for a legitimate purpose. So we try to, again, one of the good things is we have an enormous amount of experience in our other markets that we trade. So by when we started Radkl, having the partners that form Radkl, we're able to bring that over. But yes, quantitative models require a higher duty of care to make sure that the nature of the way the algorithms are working are positive to the market.
Do you think algos and bots manipulate the market today? Generally,
I don't know. I mean,
not sure.
that's not that's not for me to opine. You'd have to find all the
Okay.
bot owners and ask. You'd have to ask them: Is that did they program that in, or is that just is that what it looks like from the outside? Maybe.
I feel like in today's world, I mean, it'd be pretty easy to automate just about everything. So sometimes I wonder if bots are trading against bots that are trading against other bots that have stink bids versus other bots, and really how much are we trading anymore? Um,
Yeah, yeah. I
there,
mean, yeah, it's incredible. I mean, technology's changed so many things. I mean, I have a good friend of mine that was the other day needed a household good. It was late at night. Didn't want to leave to go do it. You know, I don't know what inspired her to think maybe DoorDash could deliver. It wasn't even like a food item, and next
Sure.
thing you know, there's what you ordered 15 minutes later. I mean, it really changes a lot of things. So that kind of change will only continue to permeate the markets.
Yeah, everything will be pretty automated in the future. What about arbitrage trading? Is that another aspect that you guys will look at doing as well?
Sure. I mean, arbitrage from the perspective of, it's a lot of what we do. As I mentioned before, keeping markets in line is sort
Hmm.
of a form of arbitrage. We want to make sure that with our quant techniques and technology, and the technology we like to deploy or think about is sort of technology at mass scale. So in a lot of our traditional markets that we operate in, we're at all points in time pricing 500,000 million securities at the same time. Now, crypto has that plus more, but it's really about the application of technology at scale. So the concept of using that technology where there's a variety of different exchanges, because crypto is interesting. There's a lot of exchanges that trade the same coin. There's the coin, there's the perpetual, there's the future. There's a lot of different versions that have kind of the same risk exposure. So there's a lot of need for arbitrageurs to come in and use their capability to keep all these markets in line. Because as I said, that brings a value into the market. Because again, you might, if an individual only has an account on Gemini or Coinbase and they want to trade ETH spot, it's really important that they feel confident that they're getting a fair price, even if maybe the ETH perpetual on a different overseas exchange, they can't see that. And individual firms like ours can help make sure that those various different products are in line, so the people that don't see the whole universe can make sure that what they are looking at is a fair deal.
Yeah, crypto can vary in different markets quite often, actually, and the premium is kind of crazy. But once someone takes advantage of it, it disappears. But I mean, you can get some crazy arbitrage opportunities, like 2x, 3x sometimes, depending on how much volume's going in. So I imagine it'd be a huge aspect to what you guys do.
Yeah, I mean, like I said, a growing market that's changing and new exchanges showing up and new products.
Hmm.
It's always gonna go through those kind of various different cycles, and that's why we think, as you mentioned before, that's why we're really excited to enter this space, because we knew having done this in other markets and seen the value that we could bring, this definitely seemed like a great market and environment to take what we do really well and bring it over into crypto.
Cool. One more question, then we'll kind of start wrapping up. What's your guys' roadmap or plan kind of look like? Have you guys started this already? Are you doing it now, or are you doing this in phases, or what's the plan?
Yeah, so we sort of announced our live late summer.
Hmm.
We've been live now and really looking to kind of accelerate and wrap it up, or ramp it up, excuse me, not wrap it up,
Hmm.
opposite of that. Ramp it up through the end of the year with a few new projects we have going on behind the scenes that we're going to be unveiling over the next month or so. But really, our core focus right now is on bringing on the best talent to help us grow. I think, as I mentioned before, one of the exciting parts about this crypto that really hit us is that this is where the smart and innovative people are. For a firm like us, the entire our success in the future will be completely predicated upon who are the people that we bring on board, and do we have the smartest, most innovative people on board driving change forward. So, we are close to a dozen people now, looking to double that within the next month or so, and easily think we could double that again with a few months after that. So that's really our primary focus right now, in addition to ramping up what it is that we already have cooking, is to focus on bringing on that talent and really making sure that the people that we bring on board have all the tools they need to succeed.
Perfect. I feel like it's a good place to wrap up. Ryan, thank you for taking the time to come on and talk about Radkl, quant trading, everything you're doing, your past, what you're doing now. It's very interesting stuff, and I think it's something that'll probably also radically change crypto, no pun intended, as we go forward into the future. But thank you. Appreciate it.
Sounds good. Thank you for your time.
All right. See you in the
Bye.
future.